Good morning and welcome to the 11th installment of our Acadiana Business Resource webinar series. My name is Andre Bro and I work on the team at One Acadiana. And our Acadiana Business Resource partners are brought to you by a lot of different organizations from around the Acadiana region, including One Acadiana, LEDA, Opportunity Machine, the Louisiana Small Business Development Center at Lafayette, Acadiana Workforce Solutions, the Downtown Development Authority, the United Way of Acadiana, and other local chambers and economic development offices from around the Acadiana region. We have come together to support Acadiana's business community, particularly our small businesses, in response to COVID-19 by hosting a series of webinars on timely and relevant topics. Today's webinar, the 11th in the series, will focus on getting the most out of the Paycheck Protection Program. After the presentation, we will have time for Q&A. So please do submit your questions using Zoom's Q&A feature. We will try to get to as many questions as we can. And if we're not able to get to your question today, we'll provide contact information for you to follow up with us afterwards. Today's presentation will be led by two leaders who have assisted many businesses with their PPP loans since the application process opened in early February. They are Heidi Melancon, who is director of the Louisiana Small Business Development Center at Lafayette, and Eddie Buttross, who is VP of Commercial Banking at IBERIABANK. They're going to walk you through the Paycheck Protection Program with a little refresher and then some information on the new PPP Flexibility Act that was recently passed by Congress and what those changes entail. And they'll also walk you through the PPP Loan Forgiveness Application as well. And then at the end, we will, like I said, have time for Q&A. So please submit your questions as we go at any time using Zoom's Q&A feature. At this point, without further ado, I'm going to go ahead and turn it over to Heidi Melancon with the LSBDC at Lafayette. Heidi, the floor is yours.
Thank you, Andre. Thank you so much for having us. And it's my pleasure to be here today and co-present with Eddie from IBERIABANK. This has been a very trying time for our business owners, and anything we can do to support them is key and paramount at this time. So just to go over before we get started, please note this is informational and educational. We are still waiting on further guidance from Congress as well as from the SBA on the update of the Flexibility Act. And we do not want to disinclude your tax professional in this equation. So when making decisions, please reach out for their guidance. Each business is unique and will require a strategy that will look completely different than another one. But for further guidance or any additional information, keep checking these two resources that are available from the U.S. Department of Treasury and also U.S. Small Business Administration. I checked this morning, nothing has come up since yesterday, and of course I'm continuously checking to make sure that we may have something from that. So if you could, next slide, Andre. So let's just overview the Paycheck Protection Program again, being that it's the main driver of the small business stimulus. And what was the point of it? It's to stabilize and assist the American economy by keeping our workers paid and employed. It was designed to help meet short-term, ongoing expenses, including payroll and many other that we'll talk about shortly. This was a private partnership between SBA and our banking situation so that we could get this in money, and we can see the difference between the PPP program as well as the EIDL program. So just to do a high-level overview of the program, those funds are dispersed throughout the United States, and the total funding for it right now is $659 billion. And that's since the new allocation that came through in April. The permitted uses are payroll and other expenses, including utilities, rent, interest on mortgage, and borrowers can receive up to 10 million. Of course, that's probably not the case for the majority of them out there. And the loan payments are paid by SBA for 6 months. So our business owners are not having to pay anything for 6 months. This loan is 100% guaranteed by SBA, unsecured, and no personal guarantee, which is unprecedented if you think about it. It's very rare that you can walk into a bank in that situation and have these funds. The SBA pays the origination fees to the financial institutions. And of course, what was very attractive for our business owners is the fact that the loans are forgiven when they're used for the expenses that are dictated for this program. Now, I don't want to be amiss and not say that we have asked our business owners to pretty much shut down their businesses. So this is not something that they're necessarily getting. I think it's just the fact that it's really helping them go forward and try what they can do to sustain their business. Next slide, Andre. So as of June 6th, this is the summary of what has been approved for the Paycheck Protection Program. And so here's an overview of the loan from the United States side, that 4.5 million applications have been received, and $511 billion has been dispersed across the country. So where does Louisiana measure up to that? We have received $7 billion of that money, which equates to 68,000 applications. And so there remains approximately $130 billion left. So there is still time for business owners that have not applied to be able to still go to their bank if this is something that will work for them. Next slide. So the passage of the PPP Flexibility Act has been very welcome. As of June 3rd, this is what we can see from a higher level view and what it was designed to do. It was designed to provide greater flexibility for loan forgiveness and spending. And we can all agree that there has been nothing but confusion right from the start, mainly because everybody has been locked at home, they have no access, and business owners really didn't have a lot of guidance to know what they could do or not. And not to mention, your business does not look the same. You started this business at COVID ID, just starting and not having any employees. So of course it was very confusing. And when they're giving you very narrow focus of a time to spend it, there's no reason to not realize that business owners really were stuck in a very precarious situation. So this also will address the challenges of competing with the unemployment coverage. We all know that many of the employees are making more money on unemployment. And in some cases, we understand everybody's household businesses have been affected by this. So it has been very challenging to get our business owners to get their employment back up to where it should be. And so we're hoping it will address that challenge. And then it also relieves that pressure of having to hire employees in such a narrow time frame. The time frame has been very short. You know, look where we are right now. We're well past 8 weeks for some of the first people that received the PPP, and we did not in any case expect that we would be here not opened up at 100% yet in June. And it also expands the time frame of the loan for payback period. So our new loans will have that extension, and current loans hopefully will be able to be modified to be able to get to that point. Next slide. So here's a deeper dive into the Flexibility Act and what does it mean for business owners going forward. So first and foremost, that forgiveness period has been extended. So from 8 weeks, very short time frame, to 24 weeks. It gives a whole lot more flexibility, no pun intended, but just exactly what it was designed to do. And current PPP borrowers will still have the option of adhering to the 8-week period. Some people have already received their funds, there's dispensed, and with that said, it's only, they only had 8 weeks to actually do it. New borrowers will have 24 weeks, which is not to exceed December 31st, 2020. And new borrowers have 5 years to repay the PPP loan. If you recall, having 2 years and 1% rate, although the percentage is very low, it's still very, very hard to pay back in a 2-year amortization. So it does provide borrowers with 5 years to repay the PPP loan. The deadline to apply is still June 30th, 2020, or until funds are depleted. And if 60% is not met on payroll, there is partial forgiveness that will be allowed. And of course, if you recall, some of the language that came out in the Flexibility Act really said that, was all or nothing. That is not the case. And we still have that partial forgiveness that is going to allow you, if you have one employee that may have not come back, then maybe it won't be, terrible at that point. Next slide. And I apologize for the connection. I'm not sure why it's coming in and out at this point. The ratio has been revised to spend at least 60% of the funding on payroll as opposed to the 75%. So with 60%, that gives you a little bit more flexibility to be able to catch up with rent payments, utilities, or the obligations that you can use for this particular loan. And then there's a new deadline for restoring the payroll and the head count, which has been pushed back to December 31st. That's referring to the full-time equivalent and the reduction of the safe harbor. And then it exempts employers from hiring requirements if unable to obtain pre-COVID levels because of public health, safety limits, or spacing requirements. And of course, we look at our gyms and we look at our restaurants, they still are not at 100%. And so it's very unfair to thrust those same guidelines on those types of businesses, knowing that they can't actually be able to bring back their employees. So it gives that flexibility and more timing so that they can have that time. Next slide. So there's been many calls of what can I use the loan for? When you talk about salaries and what have you. So let's just do a overview of what you can use the funds for. And of course, the payroll cost, we'll do a deeper dive on that, as well as the interest on mortgages, rent, and also utilities. So next slide. So payroll. The following are considered forgivable payroll expenses. So many of the calls that I got was business owners, hey, I may only have 9 employees, can I disperse the rest, of that 2 or 3 that I can't bring back as bonuses? And the answer to that is no. So you have to recall that it's salaries, which is capped at $100,000, wages, commissions, tips, state and local employer taxes if it applies to you, health insurance premiums, employee retirement plans, and net profit for those that are self-employed, with a $100,000 cap at the, dividing that 100,000 by 52 weeks and multiplying by 8 weeks. Next slide. So utilities, it's actually more expansive than I even thought, but it does include your electricity, water bill, gas, sewage, telephone, cell phone, landline, internet bills, and even transportation costs. But just bear in mind that these agreements for your utilities had to be in place by February 15th. You can't go back and say, well, I'm going to sign up for a telephone bill or a telephone service after that time and have it forgiven. So just keep that in mind, that it's prior to the February 15th date. Next slide. So what is included in rent and mortgage? So that's any payment on a covered rent or lease obligation, interest on a covered mortgage obligation, and home office expenses. If you do have a home office, just bear in mind that you're having to use the IRS formula for this. This is certainly where your tax professional can come in and help you determine what would be home office expenses that you could have forgiven under this particular program. So like I said, that's nice to know. Even if you're home-based, you do have expenses. You do have internet and different expenses that can be included. Next slide. Okay, so the forgiveness application, of course, it's been extremely, very challenging because of course it's 11 pages. And so we're hoping, and through the media, we have heard that it should be modified. So next slide. So at this point, what we have to work with is the SBA Form 3508. And that can be found on SBA's website at the link here. It's extremely long, it's 11 pages. And if you're not accustomed to reading government forms, it can be very intimidating. But there is a way to break it down. And Eddie from IBERIABANK is gonna go into greater detail about it and how it can be simplified just by actually having someone discuss the process.
All right. So thank you, Heidi. And just really quickly, as mentioned previously, that as we move through this, it should strictly be used as a guide and for informational purposes only. With the recent approval of the updates to the program, we're still waiting on updated and final guidance and requirements for the loan forgiveness process. So let's see, really at this point should be used as a sample draft. So we can go to the next slide. All right, so before we dive into the form, a few points to consider. The borrower will need to complete, once released, a modified version of the forgiveness application with supporting documentations and submit to the bank where their PPP loan application was done. At that point, the lender will review the app and make a forgiveness decision. So similar to the PPP loan application process, different lenders will use different internal processes based on their interpretation of the guidance at the time, as well as the resources available to them. This application can be more involved for companies that have employees or multiple employees. We expect it to be more streamlined for self-employed individuals and single member organizations. Again, at this point, in addition to the guidance on processing forgiveness, we're still waiting on further guidance pertaining to employee status with each company. Go to the next slide, please. So what makes up this application? It's made up of 4 main components: the application itself, PPP Schedule A, which is a payroll calculator, PPP Schedule A worksheet, which is a listing of employees, and then instructions for each of these sections. So, next slide, please. All right, so page 1 of the PPP forgiveness application asks for basic information about your organization, employees, payroll, and your existing PPP loan, as well as forgiveness as a forgiveness amount calculator, which we'll see in the next slide. Page 2 of this application requires borrower certifications, very similar to those that were completed on the initial loan application, and these certifications are asked for you to confirm by initialing. So here is the forgiveness amount calculator. Again, due to the changes made to the program, this section will see some adjustments once the updated form is released. We can go to the next slide, please. So following the application is the PPP Schedule A. And this is a worksheet to help calculate eligible payroll costs. Again, adjustments to this will more than likely be done once an updated version is released. Next slide, please. Okay, this is the PPP Schedule A worksheet, which focuses on a listing of employees, their level of compensation, and time worked. Next slide. All right, so this slide speaks to rehiring of employees and those that reject offers of reemployment. Employees who were employed as of February 15th and were laid off or furloughed may not wish to be rehired. If the employees reject your reemployment offer, you may be allowed to exclude this employee when calculating forgiveness. To qualify for this exemption, additional documentation might be required. And again, We're still awaiting final SBA guidance on these exemptions. Next slide, please. All right. So with your forgiveness application, supplemental documentation will be required to show that the funds have been used toward eligible expense categories. Documentation, payroll-related documents can include bank statements, payroll reports, payroll tax forms, health insurance, and retirement contribution statements. Next slide, please. Non-payroll related expense documentation can include verification of the existence of these services, as Heidi mentioned, prior to February 15th, 2020, and proof of the payment, including business mortgage statements, receipts, and/or canceled checks, rent or lease payment receipts, canceled checks, and potentially a copy of the lease agreement showing evidence that it was in place prior to February 15th. Business utility payments, including invoices or bills and/or canceled checks. For each of the above, bank or credit card statements might also be requested to show proof of these payments. Next slide. Thank you. So in addition to the documents needed to provide for forgiveness, there are some documents that the borrower should keep but may not need to submit. These include documentation supporting cash compensation amounts for all employees during 2019, documentation of job offers, refusals, firings, voluntary resignations, and requests by employees for a reduced schedule. Finally, documentation supporting the FTE safe harbor. The final page of the PPP forgiveness application is a borrower demographic info request from the SBA. Any owner with greater than 20% ownership, a trustor or officer director of the organization should complete this form. A name and a position is required, but demographic information is optional. This information includes veteran status, gender, race, and ethnicity. The SBA utilizes this form to measure their impact on specific demographics, and it's used for their reporting purposes only. So that concludes the PPP forgiveness application. Again, please note that you should use this as a guide and be on the lookout for an updated version to be released hopefully into the near future.
Awesome. At this point, we have about 30 minutes left, and Eddie and Heidi, mute your end. Thank you. So we have about 30 minutes left for Q&A, and we have had quite a few questions come through the Q&A feature. We will try to take as many as we can, and as you continue to have questions, please do continue to enter them. It's preferable if you use the Q&A feature instead of the chat feature because that's easier to manage. And I'll take them in the order we received them. The first couple questions were actually related, and they had to do with quote unquote old borrowers. So I presume borrowers who have already received their PPP funds and whether the changes apply to them. So the 60% expenditure requirement, the extended timeline, do those changes apply to old borrowers?
So yes, all of the changes that are being made outside of the term of the loan, all new borrowers, old borrowers are eligible for that 60% measure that's been updated.
I think it's altering the promissory note, and getting back with their banker in order to do that.
The next question is from Jackie. She says, our payroll in 2019 was 50% less than 2020. So our PPP was not 2.5 times our actual payroll amount. Can some of our idle funds become forgiven as well, since our PPP wasn't large enough?
No, the idle nothing in the EIDL is forgiven. So only the PPP portion, I guess on the 19 that they used will be forgiven. And unfortunately, the EIDL at this point is not forgiven.
The next question is from Adrian. He asks, what are the milestones for submitting the forgiveness application, and what is the deadline for submitting the forgiveness application?
So really at this point, as we still await final guidance on how it's to be processed with the new changes that have come out with the Flexibility Act, everyone's at somewhat of a holding position until that guidance comes out. You know, as we review all of this information today, it's to help to start planning so that once this information is released, the processing of forgiveness can start. But with the extension of the 24 weeks, it gives everyone a lot more time as opposed to the rush like we saw at the beginning of the program.
We had a few questions come in too about vehicle expenses. Can the PPP loan be used to cover transportation expenses?
Yeah, so the guidance that I have seen is strictly for gasoline mileage. Nothing has been for those costs, and I'm sure that if you're using it for the PPP, you will not be able to deduct it.
Heidi, your connection, we're losing your connection just a little bit, but I think we caught most of that answer. Eddie, is there anything you wanted to add?
No, I really don't have much in addition to what Heidi had mentioned on a whole lot of clarity on vehicle expense or transportation expense.
There were several more questions about folks who have already received their PPP loans and anything they need to do to make sure the new changes apply to them. I know Heidi addressed that, but would y'all mind going over that one more time, just because I know we have a lot of questions about that.
Sure. So as it stands right now, with the major changes, there's not a whole lot that needs to be done regarding the forgiveness aspect. The main thing right now is to look at your PPP loan and try to find out if you are going to have a balance on it that will not be forgiven. If you do have a balance that will not be forgiven, you should get with your banker that did your loan for you to do an amendment to the note that was signed to extend the terms from the initial 24 months to the now available 60 months.
Chelsea asks for clarity around the PTE requirements. If a part-time employee resigned, how will our payroll count be affected if we do not hire someone in their place?
Heidi, I'll let you take that one.
Can you hear me, Andre? I can see my internet is going.
You're coming in and out. Eddie might be on the spot.
Not much a part-time equivalent. There's a calculation, PTE. I'm sorry, can you hear me?
It's a little spotty. So, Eddie, are you able to comment on that?
Sorry, go ahead and read the question one more time for me.
So it's a clarification around the PTE requirements. If a part-time employee resigned, how will our payroll count be affected if we do not hire someone in their place?
I believe there is a calculation that'll be allowed on that forgiveness application. I don't have direct guidance on that at this moment. I would defer to tax professional for that calculation. But I would say stand by on the new updated application for that calculator, and then also maybe speak with a tax professional prior to that coming out. I wish I had more information on that. I do apologize.
And there's really not a lot of ruling on part-time at this time.
We got you back. Allison also asked a clarifying question about disbursements for bonuses and hazard pay. She says our loan was calculated utilizing 2019 payroll reports, which included bonuses. Our eligible expenses are covered, and we have some funds remaining that we would like to disperse to our employees if there is any way that we can.
From what I have been, the guidance that I've read, like something that's not customary, something from the bonus is not customary. So meaning that it probably would not be forgiven. There again, more guidance probably will be needed as we go through this process, because there have been some businesses that have had to call on employees to do a lot more than what they normally do in terms of hazard pay. But at this time, it's what's on paper, the salary, the commissions, the wages, customary of what you normally do.
And also, I'd also just add really briefly that the extension from the 8 weeks to the 24 weeks should allow some more time for eligible expenses to be categorized with those extra funds.
The next question is from Jason. Jason asks, what is the covered period that the PPP covers?
So the covered period will be the day, and there's a couple different ways that this can be calculated, and I think we'll see some clarification on it. But initially it was the 8 weeks from the day that your loan was funded, or 8 weeks from the day of your first payroll. That'll now be transitioned to 24 weeks, I believe, with the same 24 weeks from day of funding. And Heidi, I don't know if you can speak to this, if they're going to make that adjustment for the alternative calculation as well.
Yeah, I think you will have to probably get with your banker to expand to the 24-week, or notify them in some way that you're going to that, so that you can expand that. There's nothing that says that somebody can't stay with the 8-week period, but at this time, nothing has been said how it's going to happen. But I'm assuming that notification to your banker and letting them know what you choose to do will be paramount.
Yeah.
Another question too, it seems like a lot of people are having the same questions about clarity around transportation costs for utilities. Is that for gas, fuel for vehicles? Could y'all go over that one more time?
Yes, like the guidance that I have seen is gas, mileage, nothing of saying of paying a car note, because I'm assuming if you allow leases, then it would move into car notes as well. But at this point, it's anything, I'm assuming even if you have tolls or what have you, that probably could be included, but anything that's not going to be forgiven, just bear in mind that, that's something that's deductible on your taxes. So you probably won't be able to double dip. So if it's not something that can be forgiven, it is certainly something that's deductible on your taxes.
Another situation kind of to get feedback on from Patty. Patty says she offered an employee their job back at the same pay and hours as pre-COVID via a written offer. They did not respond, so I have no written refusal of the offer. How will this be treated for removing them from the count?
I would think having the guidance or just the backup of the documentation that she did everything on her side to offer the job back, and in spite of the employee not responding, I think that should justify it. I mean, like I said, everything's going to be on a case-by-case basis, but Patty has done everything possible to be able to bring that employee back, and she fulfilled her obligation.
Sylvia asked an easy question. Are we able to get a copy of the slide presentation? Yes.
Absolutely.
Definitely. We'll send that around afterwards. Another question about an original PPP loan and use of the new guidelines. And yes, the new guidelines do apply. And another question too about when should we submit the forgiveness application? Do y'all want to respond to that again? Sure.
Yeah, and I'll say, because the document has not been put out there yet, we don't know just yet. I know that once the updated application comes out, the banks should expect to get guidance on how they are to process it. I know at this point, even prior to the passing of the Flexibility Act, the banks had not received guidance on how to actually process forgiveness on behalf of their clients. So there's still a lot of unknowns that we're waiting for. And I think once that is issued, we'll have a much better idea.
Donna asks, do we have to notify our bank if we are going with the 8-week period versus the 24-week period?
I know as I understand it, there's nothing from a documentation perspective that needs to be done to extend that. If you have contact with your banker, I'd always recommend at least reaching out and having that discussion. I know a lot of, there have been some of the banks that did online portals and are I guess, electronic communications. But if you have the ability to make contact with your loan officer, I would do that, but I don't believe it is absolutely necessary at this point.
Sarah asks, are 1099 employees included in the payroll for the loan?
No. And I think, that was at that point, 1099 had to apply on their own. So no, 1099 workers are not included in this.
We have our next question is, can all of the forgiveness of the loan be solely from salary with no expenses?
You mean if they use it 100% for payroll?
Correct.
I would think yes. Eddie might be able to speak to that a little more, as long as its minimal is 60%. Of course, that ratio allowed you to use rent, but some business owners may have, buildings that are paid off, or they don't have the expenses that other people have with release obligations or mortgages. So as long as 60% is used for payroll.
Yeah, I agree with that. I believe if you use 100% toward payroll as we understand it today, just less information you have to provide from a supplemental documentation standpoint on those non-payroll expenses.
And if it's legitimate, the purpose of this is to keep our people employed, is to bring back those American workers. So of course, nobody is going to fault them for keeping people employed as long as it's legitimate and it's what it was when you applied. Absolutely.
Nicole asks, for the business mortgage interest, can it be applied to residential mortgage interest? The business began from home during COVID-19.
That speaks to that home expense and the calculation you would use under the IRS guidelines for home office. That is certainly a question I would take up with my tax advisor to make sure that you are doing the correct calculation of how much of your home is used for your business. And it'll be, a figure that you'll be able to come to just as you would do on your taxes.
Chris asks a clarifying question about the 24-week period. He says, if I understand correctly, it's that I can spend payroll for up to 24 weeks to accomplish full forgiveness. It would take us about 10 weeks to get to full forgiveness potential. Can you comment on that situation?
Yeah, that's exactly correct. It's just extending the 8 weeks that you initially had to spend the funds to 24 weeks. If 10 weeks is what it takes you to use up all of the funding, you will fit within that window.
Nikki has another situation. She says, my husband owns a business. He is the only owner. The CPA files taxes as an S corp for the business. My husband does not write himself a paycheck. Is he considered an employee? What amount does he use as the payroll amount? And what about subcontractors that the business gives a 1099 to?
So at that point, no, he does not have employment status. The S Corp would need to issue, it would be based on the W-2 that is issued to that owner employee that would be considered. So at that point, he's receiving draws from his company. He's getting the distribution of the profit. And so it's not employee status. And the 1099 subcontractors would not fall under this forgiveness either.
Sandra has another situation. She says one of our employees requested a leave of absence due to the governor's stay-at-home order, even though we were considered an essential business. We granted his request and continued to pay our portion of his insurance. He was out for 2 months and has returned to work. Will our loan forgiveness be reduced because of this?
Well, with the extra time, now you can actually make it work with the 24 weeks. I think if we had those 8 weeks, that would have been questionable. But with this situation, and of course, I'm not sure of his situation, but now that you have the 24 weeks, you should be able to comply with that now.
Jennifer asks, has there been discussion about forgiving all loans under $150,000 without bank review?
I've heard it in the news media, but nothing. No, this is not part of the Flexibility Act. And of course, I've heard it. I have heard that in the news media, but nothing at this point. Eddie might have something to share on that.
Yeah, that would be news to everyone's ears, but unfortunately, we haven't heard anything from Congress or SBA regarding something like that going into place. But again, everything is still pretty open-ended at this point, so we'll see. But at this point, unfortunately, not.
Carrie says that as an early borrower, her 8 weeks ends today. Can she submit her forgiveness application tomorrow if she chooses to?
Absolutely. There's nothing circumventing her from going forward with the 8 weeks as complied if she was able to spend the money and she feels confident. Absolutely.
Yeah, and the only thing hindering submitting tomorrow would be the fact that there is no updated application and the banks don't have guidance to accept those applications as of yet.
Trey,
but the 8 weeks can certainly be used.
Okay. Trey asked the next question, and he prefaces his question that it's going to be a tricky question for Eddie. But he's wondering, Eddie, if you can speak more about the forgiveness qualifications. Do you think a standard set of rules and guidelines will be instituted across the different banks?
I think across the different banks, you might see some different interpretation of the rules that are put out, as we saw with the first round of the loan applications themselves. I think at the end of the day, it'll be the same primary items that are going to be necessary for each borrower at all of the banks. At this point, depending on what is being asked of the banks, could dictate different supplemental information that is going to be requested. And depending on each of the banks, I guess, internal processes, they may or may not require more or less. So it is a little difficult to answer right now, but I think we should expect to see forgiveness be a little bit more standard than we saw initially with the loan applications.
The next question is, how will rehiring be looked at? Will it be looked at on an individual basis or on total average payroll? We had reduced our payroll only a couple full layoffs, so how will that be looked at?
So I think at this point, with the extended time, there should be sufficient time to recoup that extra payroll expense and put it out. Now, Heidi, I don't know if you have anything to add to that or
Yeah, I would say that many of the issues that were arising due to the 8 weeks are probably going to be able to iron out with the extra 24 weeks, because that probably the majority of calls that I received over that is, it's 8 weeks, it takes time to bring people back on and what have you. So I think having that extra time is going to take care of this problem.
The next question is from Mariette. She says, if an employee is out on medical leave, Will a doctor's note be enough documentation?
I'm not sure how long the medical leave is, but I mean, at this point, I'm thinking with the 24 weeks, there again, that's another thing that will help, because I'm assuming if it's that long that they're out, then it may be that, you know, other arrangements need to be made. But I would think hopefully that extra time will allow the person to come back, you know, to the office or workforce.
And her second question is whether garbage pickup is considered eligible for utilities.
I think if it's part of your utility bills or your, like I said, yes, because sewage is on it. I'm assuming, Eddie might have a little bit more detail on that one.
I unfortunately don't have a whole lot of detail on it. I haven't seen it specifically, but I know garbage, like you mentioned, like Heidi mentioned, can be a part of utility and sewage. So I think that one might have to be left up for interpretation by the borrower. If they deem it to be part of their overall utility expense, they could potentially take advantage of that expense.
And we have had a few people use the raise hand feature on Zoom. If you're trying to raise your hand to ask a question, please do just use the Q&A box. We're taking all of the questions through the Q&A feature. So if you have a question, we do ask that you submit your question that way. The next question is once again about bonuses for employees. Are we allowed to pay bonuses to employees to utilize the PPP funds?
There again, if that was not customary, I think if it's just to make up for the difference of not having one employee and spreading the money across the employees, then no. But you know, if it's, like I said, commissions or something that's customary, then yes, that may be something we'll have to get a tax professional involved in.
And similar question to one we had before about the new timeline, but since it's phrased a little different and a lot of people are having these questions, I'll ask again. Is the 5-year loan term retroactive for those who had PPP loans prior to the enacted law, just signed changing from 2 to 5 years?
Yes, it is retroactive, but you do need to get with your bank to modify the note that you signed.
What if you have to fire an employee during that time, but you rehire someone at the same rate? Would the new employee's wages be forgiven?
From what I understand, yes, as long as the count is there. It doesn't have to be the same person. Then as long as the count is there.
The next question is from Jill. Will payments made to an employee under EFMLA after the employer takes a PPP loan adversely affect the employer's ability to get 100% loan forgiveness if the employer uses the 100% PPP funds on other employee wages, non-EFMLA pay, or rent, utilities, and such?
Payments made to under to it seems like that as long as the 60%, you know, I'm not sure about the FMLA. Of course, they're out on leave, and so if they are being paid, use it's 100%. That one, I hate to answer without a little bit more information. Eddie, you might have a little bit more guidance on that.
Fortunately, I really don't. That might be one we might have to take offline and get some more information on.
Yeah, and I'll provide my email address at the end for those who were not able to address your question fully. And then I can put you in touch with Heidi and Eddie after the webinar. And once again, too, if you are trying to raise your hand to ask a question, we do need you to submit the question through the Q&A box. If you could do it that way, that would be great. William asks another question. He says, we have employees in the oil field in West Texas, and there's no work out there at the moment to justify continuing to pay an employee. How will this affect my loan forgiveness?
I'm taking it that they're not paying the person. So it doesn't mean that you can't give the money back if this is a position that's going to be eliminated because of not having work. I think many people want to spend as much of the money as possible, and it's very understanding. But my advice to them is like, hold on to the money, and that's something that can be discussed with the loan officer at that time. But to me, if that's the case, it may be that you just give that particular money back if you don't continue this job.
Yeah, and I think at that point, any funds or amount of money left over at the end of your term that was not paid out in any of these eligible expenses will term out into the loan itself, and that can either be paid out over the term, or it can be paid back now or at the time of forgiveness.
Absolutely. I mean, it's unprecedented to have a 5-year note, in 2 or 5 at 1%. So, this is money that can even still be used within your business for hiring a new employee later. So I understand wanting to pay it all back, but it is unprecedented to have no personal guarantee. It's unsecured. And like I said, these funds could maybe be set up or used at a later time at a very, very inexpensive interest rate.
Rachel chimed in next. She says, our business has used the PPP loan within the 8 weeks. Our business is still not back to 100%. Drivers have started to quit, and we will have to do layoffs. Will this affect our loan forgiveness? Similar question to the last one.
I believe if you've used all of the funds within the 8-week period on qualifying expenses, at this point, I don't believe it will. I don't see that. I'm not real sure if there's going to be any changes that'll come with this new application.
Nikki asked the next question. Can a business receive funds from both PPP and EIDL?
Yes, they can receive. Just remember that you cannot use the same proceeds. If you have documentation showing that the PPP took care of your payroll, but there could, like someone said, we have more payroll this year, well, then go ahead and use the EIDL to make up for that. Just provide documentation or have documentation readily available to prove that. But absolutely, the EIDL is your more comprehensive loan program that is going to sustain you at 30 years, 3.75. And like I said, just recall that you just can't double dip on them.
Next question is from Christy. Can per diem and car allowance be included in the forgiveness amount?
Not that I have seen on, what I saw is transportation in terms of, I'm not sure how that relates if it's, per employee, but all I saw was gasoline purchases, and I also saw mileage. So I'm not sure about the car allowance, because that may relate to like car note or what have you.
Kathy chimes in. How does a freelancer with no employees show what their payroll is? I don't write myself a check, but pretty much everything I get goes to myself with the exception of business expenses.
So I think depending on how taxes are filed would dictate if you have the ability to qualify for a PPP loan or not. I believe in this scenario, if a Schedule C is filed, you might be able to utilize net income, so any of the funds received minus your business expenses that are reported on your tax forms.
Another question about the application. Is there a due date for the application?
For the loan application itself, the deadline is the end of June, or if the funds run out before. For the forgiveness application, I believe the final date will be December 31st. Is that correct, Heidi?
Yes, correct.
And there are a couple of people who have chimed in as we're addressing their questions with a couple other comments. And if y'all do want to follow up with us afterwards, if we need to clarify anything further, please do reach out. The next question is from Kirk. He asks, is our employee count affected if an employee left the company for a position at another company? Are we required to backfill that position?
I'm assuming it was, during the 8 weeks. So yes, it probably could affect, but it could have been that they hire someone too that would make up for that. So like I said, I guess with the 24 weeks, that's going to give them a chance to replace that person if that's their plan. So that would probably take care of that.
Carrie asks, is an owner, employee, or sole member of an LLC who is a W-2 paid employee included in Section 2 of the Schedule A worksheet? Or is he listed on line 9 as compensation to owners? We may need to do some additional review of that.
Yeah, I mean, I think I saw that, those that don't have employees do not need to go through the worksheet of the employee, but being that it could be that they're just one listed on that worksheet, because they are W-2. But like Eddie might be able to talk to that.
In just kind of looking at it, I would think it would be line 9. I also think it might depend if there's other employees or not. If it's a sole member, like Heidi said, this should be streamlined. I would think line 9 over line 2.
Sylvia has a question about an answer Heidi, you provided earlier. She wants clarification on whether draws are considered payroll for sole proprietors.
Okay, that's different for a sole proprietor as opposed to the S Corp. I think that a previous participant had asked. So the draws, like I said, the net income is what clarifies the compensation for a sole proprietor, even if you're an LLC filing as a sole proprietor, as opposed to those that have an S Corp status. So the draws would be considered, like I said, you got to look at your net income to look at that forgiveness side. But I'm happy to have a conversation offline about that, or you may want to check with your tax professional as well.
And Pam chimed in on an answer provided earlier. She says that they were told no by their CPA on whether garbage collection qualified. So
okay,
that was an interpretation there. In regards to utility payments, does eligibility of expenses depend on when the bills were paid or date of service? And what is that date?
It's depend on when the bills are paid. I mean, I think it's as long as within that, like I said, now with the 24 weeks, that kind of takes away some of that complication of that narrow focus of the 8 weeks. But as long as it's within the time period from that it was in service by February 15th, and it's within the time period of when you start the disbursement of those funds.
And we're coming right up on our time, but if y'all have a few minutes to stay over, Heidi and Eddie, we just have a few more questions that we'll try to get to if that's okay with y'all.
Sure.
Tim asks, if I have used all my PPP funds, may I lay off employees after June 30 if my business has reduced significantly?
Well, I mean, of course, once they have done the application, I knew this was always going to be an issue for our business owners. And this was always my question in the beginning is like, I get it. It's brought back that employee, but there's nothing that can retain that employee if there's no sales coming in. So this puts a business owner in a very difficult situation. I think it's great that they could hire back the person, which was the purpose of the PPP. But at this point, there's no way that you could keep them on payroll if you don't have the funds to sustain them. And so what happens of that, I would think if you've had them on at that 8 weeks and it's past it, I don't know if that'll come into play.
We have another tricky question potentially from Wendy. She says that her business owner is also her landlord. He had been giving the business a discounted rent. If he changed the rent and made them pay the full rent amount, would that be able to be forgiven? or would the discounted amount we've been paying only be forgiven?
Whatever the agreement was at February 15th, meaning if they discounted it to give them something to help them through this pandemic, but if the original rent was agreed upon at a certain amount, before February 15th, then that's the amount that should be forgiven. It's in writing. There's documentation proving that.
Christy asks, if employees received salary reductions, do they need to be brought back to their original salary or made whole by December 31st to receive full forgiveness?
I would think that, again, as long as the funds are being spent on eligible payroll throughout the eligible period, you should receive or should be eligible for forgiveness on all of those funds.
Yeah.
And Brandon asked a similar question to one we addressed a little bit earlier. At what point would it be acceptable to lay off personnel to keep forgiveness of the loan? We have kept employees on, but workload does not support keeping all on payroll once the loan amount is used up.
Well, I feel like the business owner fulfilled their obligation in keeping the employee off of unemployment. They employed them, but this has never been addressed or what was going to happen at this point. No one expected us to still be at a 50% level, even when they started the Paycheck Protection Program in that, the time. Who would have thought here we are almost mid-June and we still are not at 100%. And so probably more guidance will be needed on this, but this is out of your control, whether you have the income coming in or not. I would think if you've kept your end of the bargain, you were able to say that, but afterwards, Eddie might have a little bit more guidance on that.
Yeah, I have to agree with what Heidi said. Unfortunately, I don't have a whole lot more on it, and I'm not sure how much has actually been put out there in regards to that scenario. But I think as long as we are using the funds accordingly, and you make it through your time frame, you should be fine. But I think this is something that we'll need to continue to see if there's further guidance that comes out on. I wish I had more.
Absolutely.
Trisha has a question about seasonal employees. We are a seasonal employer and our season will end before the 24-week period. How does this affect our forgiveness? We're considered an essential business. Can you provide any guidance?
I think kind of similar to the previous question, as long as you are spending your funds in that time frame, whether it's 10 weeks in, 12 weeks in, it should not. But I don't know if there again has been anything that's spoken directly to forgiveness for seasonal employees with this new extended 24-week period.
Ben asks, if payroll doubled from 2019 SBA PPP calculated period to February 2020 payroll, is there a new calculation method for the PPP loan amount?
Eddie, no, I'll let you take that, Eddie.
Okay, let me make sure I understand.
So once again, if a company's payroll doubled from the 2019 PPP calculated period to the February 2020 payroll, is there a new calculation method for the PPP loan amount?
As I understand it, there's no new calculation methods. I know that I think a couple things, and we might be able to take this one offline because there's some factors that could play into it if it is a self-employed individual or if it is a startup. There's a handful of things that could play into that answer. So if we can certainly take that one offline and discuss a little further.
Abigail asks, she says, we did salary reductions for managers before the covered period. Can we make up for those salary reductions during the covered period and have those costs be forgiven?
I'm going to interpret that Abigail had to reduce it because of the pandemic, as long as it matches what records were provided, and they made the determination if it was 2019. I don't see a problem with that because you were able to restore their salaries as to where they were.
Another question about mileage reimbursement. Can the PPP be used to reimburse those expenses?
The guidance that I read that yes, it was mileage or the cost of the gasoline. And there again, a tax advisor may be able to expand on that, but that was the guidance that I read.
All right, next question is from Donna. With the new 24-week expansion, the FTE employee count ratio is on December 31st. If you exhaust all funds prior to that, does it change the date to correspond when the funds were exhausted?
No, I don't think it will. I really think as like, you know, if you've exhausted it in the 9 weeks, but yet you still wanted to have more time to rehire people, that's the corresponding. It may be that you've expended those funds, but it does give you a little bit more time to bring back on the employees at that point, if I'm understanding the question correctly.
And we have time for 2 more questions. This is one more question about headcount, and it's a question about headcount at the beginning of the time period versus the end of the time period. As long as they are equal, will this fulfill the requirements?
Yes, it will equal, as long as it's the full-time equivalent. Yes, that will fulfill the requirements.
And the last question is from Jim. He says, our business has not returned at all. Conventions and trade shows are canceled through July so far. Percentage of employees have been retained all at this time. When we run out of PPP, can all employees go to unemployment?
It may be that they have to, because at that point, like I said, there's really, the thought of the PPP was that the economy would be back up at the end of the period. And we know that's not going to be the case. And there's still a lot of hesitancy of returning back, mainly for safety reasons. So it may be that that's what your employees will have to, you will have no revenue to be able to pay them.
So that does bring us to the end of our Q&A portion. Heidi or Eddie, do y'all have any parting thoughts before we close out?
I'll just say that there's still, I think it's still a lot of interpretation. Of course, we scheduled this seminar right at the cusp of when this new guidance was coming out. And there again, I've been checking to see any type of guidance coming out, but I think reach out to as many people as you can to get this guidance or questions answered, because we're still having to take it day by day. And hopefully new information is going to be forthcoming to be able to make good decisions going forward and do what's right for your business. I think sometimes business owners are trying to make it fit to the loan as opposed to what's right for their business. And that's what you got to do, what's right to make your business survive.
Yeah, and I certainly have to second what Heidi says. You know, utilize your resources that are out there, your tax advisors, your bank, the LSBDC. For those that haven't utilized the program, there's still a large amount of money out there that if times are tough, you should certainly look to utilize the program. That's what it's there for. But again, similar to what Heidi said, you know, use the program as it's meant to be. The 24 weeks has really given a lot of people a lot of extra time to get this funding spent, and should hopefully lessen the pressure to run through this funding.
I think that's a good place to end. So I'll just wrap up with a couple closing remarks. I'm putting my email address up there on the screen. And we're also going to email everyone who registered with contact information, with a link to the video recording and a copy of the PowerPoint presentation from today's webinar. And we encourage you to hopefully join future webinars with us as well. Thank you again to Heidi Melancon and Eddie Buttross from IBERIABANK and the LSBDC at UL Lafayette. And thanks to all of our participants for joining us today. Stay tuned for follow-up correspondence and please stay safe.
Thank you.